are you making of the markets today and yesterday, sir? I mean, a sharp correction yesterday. Do you think it was just a one-day sort of a shakeout, considering that we are around that F&O expiry time and maybe the traders are repositioning themselves, or is there more to it?
I think all of that and more. I think, Siyash, we have to remember that we are at near all-time highs, and market has moved up quite a bit over the last few months. And at such high levels, a bit of consolidation is par for the course. Of course, yesterday's, the SEBI communication regarding mid cap and small cap to the fund managers and to the AMC industry in general was the cause of a bit of a concern, naturally, because the way mid cap and small cap has moved up, and regulator who has much more access to information than we all possess, sounding a warning bell definitely is a cause for taking stock of the situation. And mid cap and small cap corrected drastically. Of course, we have this F&O expiry, as well as the rotation of positions amongst the fund managers. So all that put together, I think we did see quite a sharp correction. There were no positive triggers as such yesterday, and that led to this correction.
All right, and as you rightly pointed out, sir, the broader markets, I mean, they are cracking. Both mid-cap and the small-cap indices, they have turned negative for the month of February. And, of course, there was a red flag raised by SEBI and AMFI. They have asked fund managers to limit the flows in mid and small-cap space. I mean, what are you making of this correction in the broader markets in general? And do you think that this much celebrated rally that we were all talking about, we were all gung-ho on in the last 12-15 months, is that nearing its end?
I don't think the rally is nearing its end. As I said, after the market running so much, bit of consolidation, profit booking, I think is par for the course. So I don't think we should get too perturbed. And the regulators, the communication is most probably very appropriate, considering the kind of froth we have seen in some of these small cap and mid cap. I'm not, even suggesting that all of them are bad, or they all are at unrealistic valuations. But there are pockets where the valuations did look full, and sometimes a little more than full. So bit of correction, bit of profit booking, bit of stock taking is essential amongst the fund managers and the industry as such. If retail also gets the message and takes necessary corrective steps, that's also good. So overall, I don't think fundamentally anything has changed in the market, whether it's the macros or the micros. The India macro looks definitely good. Corporate results Q3 were by and large okay. Global scenario is also not bad or anything to get unduly perturbed about. So under the circumstances, I don't see the rally ending or any such thing happening. Yes, at all-time high levels or near all-time high levels, volatility is bound to happen, and pretty much that's what we are seeing.
Of course, clearly there is some caution in the system. And, we were talking about FII flows, and I mean, they have been rather undecided on what their stance is, of course, on the Indian markets in the last 6 months. But in the last 3 months, I'll come to Amit first. FIIs have pulled out nearly 4,000 crore worth of equities. Where is this money going, Amit?
Financial services, while they were gung-ho about this sector, FPIs, in the year 2023, they put in 52,900 crores through 2023. In the month of January itself, the financial services sector saw an outflow of 30,013 crores. And in the first 15 days of February, they've 7,536 crores more have gone out of this sector. Construction has seen a net outflow in the last 1.5 months after seeing some inflow in 2023. Telecommunications net outflow in the first 15 days of February 2024, but there was a big inflow in 2023 and in January 2024. The sector that has been a darling of the FPIs in the last 1.5 months is IT and healthcare. net inflow of almost 4,000 crores have come into healthcare, IT almost 7,000 crores in the last 1.5 months, consumer services almost 4,000 crores in the last 1.5 months. Services and auto components have been choppy. There was a net outflow last month. There's been a big inflow this month, but 2023, 29,389 crores were put in by FPIs into automobiles and components sector. Now, Mr. Bandyopadhyay, do you see the financial services sector coming back into the radar of the FPIs anytime soon? And what is worrying them about the Indian financial services sector, according to you?
Two things before I answer your question. I think you put it very nicely sector-wise, but there are a couple of other factors which I want to highlight. One is the Chinese valuation of Chinese equities have level where I think most short-term funds at least are looking at an arbitrage opportunity or an opportunity in the short term. So a lot of these tactical funds are moving to China. Structural and long-term funds obviously are betting on India and they continue to bet on India. But some of these short-term guys are looking at China definitely. So that we have to keep in mind. Second thing, if you look at the data of FII inflows into India, you will find a strong inflow into Indian debt, because I think that is where a lot of action is. Indian debt is getting included in multiple indexes, and it is of course attractive even after all adjustments. So that is what is happening. Now coming back to the financial services, I think there are some concerns as to whether the financial services returns or financial services performance has already peaked. And from here on, we will see things gradually moving in a direction which is either stable or the credit costs start going up. So I think that is one concern which is there amongst the investors, and that's what they're looking at. Now, having said that, I believe that particularly the PSU banks, that is one space where there is a lot of opportunity still sitting, whether it's in State Bank of India, Bank of Baroda, Punjab National Bank, Canada Bank. I think these are banks which are transformed in a way, and I'm not comparing them with an ICICI Bank in terms of the transformation, but they are definitely transformed from what they were. And I think they deserve better valuation. They have already moved up, but I think there is much more scope for increase from current levels as well.
Mr. Bandyopadhyay, two sectors which have been on the radar even of the impetus that PLI has given to these sectors. One is pharma and one is IT. Do you see FPIs being positive on these two sectors on a continued basis through this year? They have been in recent times.
I think they will. One has to remember that IT sector to a great extent depends on what's happening in US economy, and the way it looks, US economy is strong, and they are posting growths much better than expectations. There are bit concerns about whether on ground these are actually translating into orders or not. But the reality is it's a matter of time before the order flow also picks up. So as far as Indian IT companies, on an average 50% plus of their income comes from US, should do well. And I think FPIs know that pretty well, and they will continue to invest. They have started seeing a lot of brokerage reports, foreign brokerage reports coming, advising buy into large cap IT stocks, and that sets the trend. As far as pharma is concerned, I think it's a mixed bag. While we try to paint it in one brush, there are multiple pockets and multiple segments in pharma. What we understand is that some of the pockets are going to do extremely well, and that is where one needs to look at. Also, I must mention that US generic pricing pressure hasn't yet disappeared. So, companies totally dependent on US markets or fighting in the US generic space will continue to struggle. They may post good results in one quarter, but you can't be sure about their next quarter results. Companies focused on Indian markets and other geographies will tend to do better.
All right, and sir, before we let you go, you made a point that the money, I mean FPIs, even while they are not investing in equities, they are certainly lapping up government debt. In fact, I mean, if you look at it, they have bought debt worth about $4.5 billion in just the first 2 months. I think it's the highest inflow in the last 6 years, or if you look at it on a monthly basis. What does it all mean for the rupee, sir?
And this is exactly what I was trying to point out, Suvash, that while we are being an equity market participants are lamenting the fact that they are not putting money in equities, they are putting money into India, and that is definitely helping stabilize rupee. As things stand today, it has not shown major appreciation. And my guess is that it won't appreciate also too much. But stable rupee is what the RBI wants. RBI definitely doesn't want to see rupee appreciate too much or depreciate too much in a hurry. So I think it is working to RBI's plan and RBI's wish. And I think rupee will continue this trajectory only, being in this particular range where they are hovering around the 83 to the dollar mark.
All right, and one final question from me. I mean, the Reliance Disney deal has finally been announced. I mean, what sort of impact do you see on the stock price of Reliance? Because the stock is, of course, very close to its all-time high, but has been struggling around that 3,000 mark, sir.
Well, I think I've been, recommending Reliance to my investors for the last 1.5 years. I think even before this deal, there were 3-4 businesses with great potential sitting inside Reliance. Whether it's the retail business, whether it's a telecom business, green energy business, and of course the traditional oil to gas segment. Now with this, they are becoming an entertainment behemoth, and that is again a huge segment. Today Reliance market capitalization is less than what the market capitalization of Netflix is. Now that gives you an idea. Now Netflix is in only one segment, which is this OTT business, which is, I think is a very small part of Reliance's business. They have the potential to become big there. But look at the fact that Reliance is in multiple other businesses where they can be comparable at, retail with Walmart, at telecom with the biggest telecom players in the world, at oil and gas with the largest oil and gas players in the world. So I think it is a huge value unlocking story. So as far as I'm concerned, from a long-term investors portfolio perspective, Reliance is a must-have in their portfolio.
All right, words of wisdom coming from Mr. Sudip Bandyopadhyay. Sir, appreciate your time, appreciate your thoughts. Thank you for joining us here on News 9.